All right, so American Express just wrapped up a huge year. We're going to dive right into their latest earnings report and really break down the playbook that led to these record numbers. You might have seen some headlines focusing on a tiny miss in the last quarter, but honestly, that's kind of missing the forest for the trees. The real story, the big picture, is this number right here. Amex just finished 2025 with a record-shattering $72 billion in revenue. Just massive. Okay, so yeah, if you look at the nitty-gritty, the quarterly numbers were a little bit off what the analysts expected. So that begs the question, right? How on earth do they still manage to pull off an all-time high for the entire year? And more importantly, what does that tell us about their game plan for the future? All right, let's zoom out and look at the full report card for the year. And wow, the full year report card is just impressive. I mean, look at this. Revenue is up 10%, earnings per share up 15%, and get this, a staggering $10 billion just from net card fees. On top of all that, they returned over $7.5 billion to shareholders. It all points to one thing, the power of their premium customer. So this really gets us to the core of it, the philosophy that's driving all these incredible numbers. And it's something their CEO, Steve Squeri, calls their investment playbook. And what's so interesting is that in a time when a lot of companies are cutting back, tightening their belts, Amex's philosophy is pretty simple, but man, is it powerful. It's all about this. Spend aggressively on the things that make their premium cards really, truly valuable. So here's how the playbook works. It's basically a 4-step cycle. First, they pour billions into what they call value propositions. Think of that as all the perks, the benefits, the cool experiences you get with the card. That investment drives deep customer engagement, which then lets them really focus their marketing dollars on their top-tier premium products. And that just fuels this whole cycle of long-term sustainable growth. It's a flywheel. And when we talk about investment, the scale is just mind-boggling. We're talking over $11 billion a year, and that's just on marketing and technology. I mean, that's the engine powering this entire strategy. Okay, so what does this playbook actually look like in action, out in the real world? Well, there's no better example than what they've done with their iconic Platinum card. So you want proof this strategy is working? Here's the first big one. The average age of a new U.S. Platinum cardholder is just 33. Yeah, this is definitely not your parents' old charge card anymore. And that age stat, it really points to this huge fundamental shift. You can see it right here. Millennials and Gen Z are now the single largest and fastest growing part of their U.S. consumer spending. They have absolutely nailed capturing that next generation of high-spending customers. And it's not just that they're signing up. These younger customers are super engaged. Take their dining perks, for example. That investment has directly led to a more than 20% jump in spending at their partner restaurants in the U.S. It's working. But here's the real kicker. You think that after they raise the annual fee on the Platinum card, people might leave, right? Nope. Retention rates haven't budged. They've stayed, in Amex's own words, very high. That tells you everything. The value they're offering is so strong, customers are more than happy to pay up. Okay, but it's not all a flawless victory lap. To really get the full picture here, we have to look at the other side of the coin, the competition, and the cautions that Amex themselves are keeping a close eye on. And a big one is the small business battlefield. This space is just heating up like crazy. Now, don't get me wrong, Amex is still the incumbent, the big dog. They're 3 times larger than their competitors, but they're facing these really agile fintechs like Ramp, and now you have these consolidated powerhouses from deals like Capital One buying Brex. So these are the key risks that management has put on everyone's radar. You've got that intense competition we just talked about, general macroeconomic and political uncertainty, and then there are things like a potential 10% cap on credit card rates. Plus, they're seeing a little bit of softness in spending from middle market businesses. And yet, despite all those challenges, despite the headwinds, their forecast for 2026 shows they are absolutely betting big and doubling down on their playbook. So what does that look like? Well, their official guidance for 2026 is for another 9 to 10% in revenue growth and a really solid jump in earnings per share. What's amazing is they are sticking to the exact long-term plan they laid out a few years back. No wavering. And if you want a crystal clear signal of just how confident they are, Look no further than this. They've announced a planned 16% increase to their quarterly dividend. I mean, that is literally putting your money where your mouth is. So, how are they going to fuel this next wave of growth? Well, it all comes down to a massive bet on technology. They're building out a whole new data and analytics platform that's going to power everything: more personalization, a ton of Gen AI features, and even these new agentic use cases. It's all about tech. Which, it all leaves us with one big, fascinating question. At the end of the day, the entire Amex model is one high stakes bet, a bet on the premium customer. As spending habits keep evolving and the competition gets even more intense, can that bet on premium continue to pay off like this? That's the billion-dollar question.